Why do you think the market has recovered this far, this fast? And are you worried about a prolonged drop, or do you think this signals potentially some optimism?
Well, I think that certainly I think the more tempered statements out of Donald Trump may have helped, and I think the market's overshot. I think one point we were down over 600 points. I think what part of the issue here, Sarah, is that the markets had very quickly, in 48 hours, gone to almost fully price in a Hillary victory. So the market really was ripe here in case that didn't happen. Of course, it didn't happen. And look, I think this is a clear case of at least a fully, if not more than fully valued stock market getting hit with a surprise. And I always said it was going to be difficult to sustain the multiples where we're at right now if we get a certain level of political uncertainty with a Trump victory. Frankly, this is the sort of pullback in the market we have been expecting. I don't think it's going to last indefinitely, and I think it's going to provide a good buying opportunity, probably more quickly than a lot of people think. There's no question that we have political clouds overhanging, but the reality is that even if Hillary Clinton had won, there were still going to be lingering question marks over her ability to govern, and of course, how she was going to be held in check by, I think, what was still going to be a very aggressive Tea Party-laden House of Representatives. There's some planks of the Trump fiscal platform, some planks that are very positive for growth and positive for the stock market too. Certainly positive for some sectors of the stock market. So, I think this is going to provide a nice buying opportunity. It's just the classic uncertainty factor. It's a glibber mark that markets don't react well to uncertainty. We're seeing it, in real time. But I think the dust will settle soon, and there'll be some nice buying opportunities in some sectors of the market.
So there's your markets hat. What about your economics hat? How does this change the economic outlook for this country?
I think near term, when I say cloud, it is going to cloud investment and consumer spending decisions. I think there's going to be uncertainty. I mean, is he really going to, for example, in the next 100 days, try and roll back Obamacare? So we just had a shock with Obamacare several years ago, complicated piece of legislation, and we know what's going on now with premiums for, well, not for everybody, but for some people. Is he going to roll that back after everybody was just getting accustomed to it? Is he really going to slap on tariffs on some of our major trading partners? So I think the impact it could have near term on global trade flows, I think that, the impact this could have, when you try as an economist to model uncertainty, the first thing you do is you go and take a look at what the savings rate's going to do. My expectation of the savings rate's going to go up near term, right in time for the most important shopping season of the year. So I think it's going to have impact on savings rates and spending. It's going to tighten up, as we're seeing right now, financial market conditions for an economy that was already, fairly modest growth. So I think that this is going to actually, on a near-term basis, put a roadblock in the way of the economy. I think that's, that could be a couple of quarters. The one thing I would just say is, what you see isn't always what you get during these presidential elections. Firstly, not everything always comes to light from what was promised during the campaigns. Point number one. Point number two, and I make this example all the time, Ronald Reagan came in. I don't want to draw, there's too many differences, but there are a lot of similarities. He was a renegade, a maverick, an outsider, and there was a lot of concerns over his policies, both foreign. I mean, the first thing that Reagan did when he came in 1980 was he raised tariffs on Japanese-made electronic products. Of course, back then, China, Japan then was China today. Look, the first 2 years of the Reagan presidency, nobody remembers the fact that we had a recession. We had a 20% down market. Bought in the summer of 1982. People just remember the next 6 years when the market rallied 185%. So eventually, we all have to sit back here, no matter how you feel about the personalities. You have to monitor and assess the presidency over a complete cycle. He just got elected. So I think that a lot of the near-term downward pressure right now, I think, unless we get a really sustained recession, which I don't think is going to happen, it's not a financial event, it's a political event. I think that the economy coming off this next several months of uncertainty is going to do okay. David, I think the markets are going to climb back.
What happens to the Fed, both in terms of the policy and the makeup, in particular the chair?
Well, that's again, that's situational. I think that at this point, if the markets remain skittish, my sense is that the Fed's probably not going to do anything in December. That was the thing that, the reason why the markets went and priced in more Fed tightening, say, in mid-December, it wasn't just because we had an okay payroll number and the bar was set low for that. It was also because the polls started showing, post the third act of Mr. Comey, that that Hillary was going to win the election, and that was really going to be the last peg for the Fed to go. I think it's more uncertain now that the Fed does go. I'd say that if the markets remain skittish, they could, they've showed how patient they could be all along. They need to become more patient.